Hi, welcome to Forex in 4. I'm Mike Conlon for FXEDU, and in the next 4 minutes, I'm going to show you the highlights of where the action is in today's Forex market. So let's get started. Good morning. Today is Thursday, July 22nd, 2010. This morning we're talking about unusually uncertain. Now that was the exact phrase used by Fed Chairman Bernanke yesterday in his testimony to Congress with regard to his current economic outlook. Now this sent the market into a little bit of a tizzy yesterday, and it had a little bit of a sell-off despite some recent good U.S. corporate earnings that we've been seeing. Now, just want to show you here on the chart, we're looking at a 15-minute chart of Aussie USD. This is sort of a proxy for risk, if you will. And you can see right here, 2 o'clock yesterday, that's Bernanke's comments, and boom, sends the Aussie lower, dollar higher, U.S. stock market sold off. Thanks a lot, Ben. So short of calling this guy Captain Obvious, I'm going to get to that later. There was some risk aversion yesterday, but this morning it sort of flipped around. We're seeing some risk taking in the market, and this is because we got some, again, good corporate earnings here in the U.S., and we also got some good economic data from the Eurozone. They came out with PMI data, and they also came out with industrial orders data, which beat expectations. So that shows sign that there's some economic growth going on over in the Eurozone, which is a good thing. So, when we think about stocks, I often talk to investors who say, well, what do you think is going to happen to the stock market? Are we have to worry about a double-dip recession and things like that? And my answer is usually twofold. And first is that, yeah, I think double-dip recession is a concern and something to be worried about, obviously. But right now, there really is no place else to put your money. Investors that are seeking gains realize that they're not going to get it in the form of bonds. Bonds are basically paying you negative interest. If you look at inflation data, it comes out to about even. So you're not getting any return there. So stocks are the next best thing to do, with the exception, of course, of the currency market, which is what we do here. And for those of you who've been following this blog, you know that the nice thing about the currency market is that you can diversify away from the U.S. if you're so inclined, okay, and that there's always something moving higher, if you will, in the Forex market. So, that's kind of what we're seeing today. So we've got risk taking happening here, and I just want to show you Aussie USD. You can see right as the European session opened, boom, just took off, nice little higher. And this comes a day in advance of the Euro bank stress test. Now, we've been talking a lot about that. That's sort of been the big news here coming up. But, by and large, folks are expecting this to be very positive. And, it could be that could happen because, that's the way they set it up. They want to show positive numbers, what have you. But generally speaking, I believe that the measures that they've taken over in Europe to help the economies, help the banking system, help governments with their sovereign debt issues are all being seen as positive by the market. Now, conversely, here in the U.S., we're doing the opposite. We're going continuing with extend and pretend, and as you can see, the numbers are coming in bad. We just had jobless claims numbers come out this morning, and I'll just get you exactly what those figures were. All right, we had jobless claims came in higher, 464,000 versus an expectation of 445,000. All right, so this thing isn't getting better here. But meanwhile, let's look at the euro. All right, and as you can see, euro trading back higher, and this is coming in advance of the stress test. So, this really gives you an idea of what's going on with as far as how people are viewing the different policy reactions to the financial crisis that we've endured. And you can just look here real quick. You can see the Aussies higher, you can see the Kiwis higher, and also the loonies higher as well. Just want to show you that, but you can see that the euro, well, actually it looks like it's giving back a little, but the euro was higher than the loonie earlier, and that's not usual in a risk-taking scenario. But I think what's happening a little bit here with the loonie is that people are concerned that because Canada is so reliant upon the U.S. to buy their exports, that if there's a U.S. slowdown, that could potentially affect Canada's economy as well. Well, I guess Bank of Canada Governor Mark Carney is going to come out today, and the market's expecting him to sort of back away from the dovish comments that he made when they raised rates, at the last rate hike, which was, I believe it was earlier this week or end of last week, I forget. But so that's what we're looking at here. Now, you can also see dollar weakness based on where it's trading versus versus the yen. All right, it's come off a little bit here, and this comes, in advance of the rhetoric which is being talked up in Japan. Everybody knows that the Japanese are known to intervene in their currency, okay, and people fear that. Yet, nobody's really worried about it at this point because the dollar looks that bad. And again, that has to do with policy. Real quick, in the UK. You can see the pounds getting a bid there. They came out with better than expected retail sales figures. So, the BOE, Bank of England, may need to rethink its policy if inflation does not come down to its targeted band of below 3%. So we're going to have to keep an eye on that to see what happens with the pound. But, things look okay there in the UK for now. So, I want to get back to, the idea of calling Ben Bernanke Captain Obvious. No kidding that U.S. economic prospects are uncertain. But I'm not really sure why this is unusual. And I think it comes down to this, is that Bernanke is more of a history buff than he is a forward thinker. Okay, he's known for his study of the Great Depression and what happened here some 70 years ago. But, if you think about it, world economies are vastly different than they were 70 years ago. And that perhaps the lessons he learned from the Great Depression don't really apply to today's economic situations around the globe. And, that sort of makes sense because, we've got progress, we have technology, we have all these things that change economies and make things happen for different reasons. Yet here he is relying on what happened some 70 years ago to figure out what's going on today. And that's why he thinks it's very unusual, But guess what? Here's the deal, man. If you take a look around at, how, folks are voting and, people vote by buying and selling currencies, if you think about that on a daily basis, all right, people are more in favor of the austerity measures that are taking place abroad than the extend and pretend policies we're seeing here in the U.S. And that just, goes to show you that, maybe it's time to cut the fat here in the U.S. and to take our medicine. However, it's a shame that U.S. politicians don't have the political backbone to do so. All right, now it's kind of like saying to someone, hey, it's really unhealthy to lose 50 pounds. Well, yeah, that's true. If you're a 100-pound woman, that's very unhealthy. However, if you're a 200 or 300-pound woman, then guess what? Losing 50 pounds is not unhealthy. And that's the problem here in the U.S., that we are obese, we are bloated, and these politicians, when they look in the mirror, they can't recognize this. I call it reverse economic anorexia. It's kind of like you look in the mirror, you're obese, and you think you're skinny. So, it's time to cut the fat here in the U.S., and maybe it's time to start with the politicians and the current administration, because right now we're going down the wrong path, and hopefully this isn't going to be irreversible down the road. So that's what we're looking at today, folks. Risk-taking in the market. I'm going to keep an eye on the stress test tomorrow. They're actually coming out at noon Eastern Standard Time here in the U.S., so right after the European markets closed, which that sort of brought a little bit of a protest from France. So we'll have to see what happens. But noon tomorrow is going to be when the results are released. So until that time, we may see some volatility. So good trading to all. As always, be sure to check out the written blog at www.fxedu.com to get complete coverage of today's Forex market. If you would like to learn more about how to trade the Forex market from professionals like myself, be sure to check out our affordable Forex trading courses. And if you're already a seasoned professional or aspire to be one, ask us how we can help you achieve your Forex goals. Go to www.fxedu.com to get started today.